Okay, let's dive in. We're looking at something, well, it might sound a bit technical at first, but it really hits home if you have a RRIF, a Registered Retirement Income Fund. There's this significant update from the Canada Revenue Agency, the CRA.
That's right. And it's significant because the guidance it replaces, it's from way back in 2002.
Wow, over 20 years. So, yeah, that signals some pretty important shifts, likely for the financial institutions, the carriers holding your RRIF.
Exactly. And by extension, it affects you, the RRIF holder, and how things work. The document itself, Information Circular IC 78-18R7, it's actually written to those carriers.
Ah, okay.
It spells out the rules under the Income Tax Act for RRIFs, what the carriers need to do to keep things registered properly.
So it's like the instruction manual for your bank or brokerage about your RRIF.
Pretty much. It's not a guide for you on, say, investment choices, but it is the rule book they have to follow. Got it. And we pulled out 4 key things from this that seem most relevant for listeners. First, those minimum withdrawal tables, super important for how much income you actually get each year. Then, rules about transferring RRIFs between different places. Maybe your bank gets bought or something.
Yeah, that happens.
Third, guidelines for paperless applications, very modern finance.
Right.
And finally, a little administrative thing, but with a kind of surprising change contribution receipts.
Yeah, and understanding all this, it really helps make sure the RIFs stay compliant, keep their status, and that you, the annuitant, are, protected and kept in the loop.
Okay, let's unpack it. Starting with those minimum withdrawal amounts, what's the main thing to know there?
Well, the circular basically confirms the standard calculation. It's based on the RRIF's market value at the beginning of the year, times a factor based on age. And you can use your age, or your spouse's or common law partner's age.
Right, but you have to pick one at the start for that specific RRIF, don't you?
Exactly, that initial choice. It's locked in for that plan. And it's a pretty significant decision, as you said, because it dictates the payout rate over potentially decades.
Yeah, absolutely. So what's the update here then? Is it just confirming the status quo?
Mostly, but here's the maybe slightly complex part for the carriers. The CRA is still maintaining 2 different sets of withdrawal factors.
2? Still? Why?
Yeah. There's one set for what they call qualifying RIFs, usually older ones, pre-1993.
Okay, a smaller group.
Right, and then another set for all other RIFs, which is, the vast majority today. The factors go up with age in both, but they ramp up a bit differently.
Huh. Why keep both tables after all this time? Seems like extra work.
It is extra work for the carriers, definitely. It really stems from historical changes, grandfathering older plans under older rules. But it also kind of reinforces the point of RIF, right? It's meant to provide income over time, not just be a tax shelter forever. Those minimums ensure the money comes out.
Okay, so minimums confirmed, 2-table structure remains. Got it. What about moving an RRIF if I want to switch institutions?
So the guidance clarifies the processes. You've got the standard individual transfer.
Okay.
That's where you, the annuitant, have to sign a new application with the new carrier.
Right, fill out the forms again.
Yeah, and they re-register the RRIF.
Yeah.
But it also formalizes rules for something called transfer by specimen amendment. Think of it as a bulk transfer.
Bulk transfer. What does that mean for me, practically? Do I have to do anything?
Potentially less, actually.
Yeah.
It means if, say, your carrier's entire RIF plan is moved to another institution, or just a big block of accounts goes over.
Okay.
The new carrier might not need a brand new application signed by every single person.
Yeah.
Streamlines things administratively for them.
Ah, I see. Sounds easier for them, but what about protecting me? Does the CRA just let them move my money without asking?
No. That's the key balance they're striking. While the paperwork might be simpler for the institution, the circular is really clear. The carrier has big responsibilities. Well, their plan has to allow this type of transfer. First off, they need meticulous records. And crucially, they must notify you, the annuitant. They have to tell you about the transfer and give you the new plan terms.
Okay, so even if I don't sign something, I have to be told and get the details. That's good.
Yes, exactly. You're kept informed.
All right. Now, speaking of paperwork, or maybe the lack of it, digital applications, how does the CRA view applying for RRIF online or over the phone?
They're fully on board with it. Paperless is fine online, electronic forms, even phone applications.
Okay. Any catches?
The main rule is simple. Whatever info they collect electronically or verbally, it has to be the exact same information that would be on an approved Paper T 2033 form.
Ah, okay. So if they already have an approved paper form,
then they can basically just replicate that digitally. No special CRA approval needed for the digital version itself. But if they don't have an approved paper form, or their digital process is totally new,
then what?
then they've got to submit screenshots or phone scripts, whatever it is, to the CRA for review, just like a paper form.
Makes sense. And what do I get in this process?
Regardless of how you apply paper or paperless, the carrier must give you the plan terms, your contract number, and the date and time of the application.
Okay. And how do they prove I actually agreed, especially over the phone or online?
That's maybe the most interesting part here. The circular puts the full responsibility on the carrier to figure that out.
Really?
Yeah. They have to determine how they get and confirm your consent legally. E-signature, recorded call, whatever. The CRA basically says, that's your job, your liability, to get proper consent.
Wow. Okay, CRA isn't dictating the method, just the outcome and the carrier's responsibility. Fascinating.
It is.
All right, last point, those contribution receipts. You mentioned a tweak.
Yeah, a notable one, especially for the carriers. The signature of an authorized official, no longer required on RRIF contribution receipts.
No signature, just like that. For big banks processing tons of these, that must save a lot of time and hassle.
Oh, absolutely. It's a clear administrative efficiency. Think of the processing time, printing, mailing, physical signatures.
Yeah, but does the receipt still have all the important stuff I need for my taxes?
Yes, completely. The guidance is firm on that. The receipt still needs all the essentials. Carrier's name and address, your contract number, your name, address, SIN, the amount contributed or transferred in, and the date. And it still needs that instruction to attach it to your tax return.
So less admin for them, but the core information for you is unchanged.
Precisely. The integrity of the tax information is maintained.
Okay, so looking back at all this, it feels like there's a theme, right? The CRA seems to be trying to streamline things for the institutions.
Yeah, like removing the signature requirement, allowing these bulk transfers, embracing paperless.
While at the same time really reinforcing the core rules and protections for the annuitant.
Exactly. Things like keeping those two withdrawal tables, making sure notification happens during transfers, putting the onus on carriers for proper paperless consent and documentation. It's a balancing act.
And for you listening, understanding this stuff means you know what your RRIF carrier is supposed to be doing, why they have certain processes. It hopefully gives you a bit more confidence navigating your retirement income.
It does. And it leads to an interesting final thought, something maybe for you to mull over. The source material itself talks about a consumer protection principle embedded within the tax administration framework for these registered plans.
Consumer protection within tax rules.
Yeah. So the question is, how do these very specific, sometimes technical tax administration rules we just talked about, like the withdrawal tables, the transfer notifications, the consent rules, how do they also function to protect your interests, specifically as an annuitant? It's an interesting angle to consider.